Hello, this is Rick Geiler from SilverSide Insurance Marketing. Welcome to this issue of Update. What I'm going to talk about today, real briefly here, is the importance of doing annual reviews with your clients. We commonly have agents call in and they tell us they need more people to see. They need leads. They need an outlet for their products. And don't we all? But the one thing not to be overlooked is existing clients we've worked with in the past. We call this section annual reviews. It doesn't necessarily have to be once a year. It can be a 2-year-old client. It could be a 6-month-old client. But the idea is to go back and take a look at what their situation is now. Maybe you got a client a year ago because they went to one of your seminars or they responded to a flyer you sent out and they had a particular need. They had some money they needed to do something with, or they needed some insurance coverage, or whatever the case may be. So what you might want to do is stay in touch with those clients by doing periodic reviews of their situation. And what can you gain from that? On first look, you might say, well, they had $100,000. We put it in a 10-year product, so they're tied up for 10 years. Well, that's not necessarily the case. Here's some of the things you might be able to find upon doing an annual review. In this day and age, with low bond rates, the MVAs, the market value adjustments that are embedded in a lot of annuity contracts designed to protect the carriers from a high number of redemptions should rates go higher, those very MVAs now commonly are working in a client's advantage. We actually saw a case the other day where I think it was a 2- or 3-year-old Allianz annuity. The client's surrender value was higher than their account value due to the effect of a positive MVA that more than wiped out the surrender charges. So particularly what we're seeing a lot of these days are 2-, 3-, maybe 4-year-old. Specifically, I would say a lot of Allianz, Aviva, Midland North American, and F&G. We're seeing a lot of positive MVAs. So when you're reviewing a client's situation, they might show you a 3-year-old annuity with a positive MVA. That money might be free and clear to do something else with. Maybe you could move it somewhere, pick up a new bonus, pick up some better crediting for your client, and in turn, pick up a nice commission for yourself. One other thing you might be able to look for is if they have an annuity that their sole purpose of that is to park money to pass on to heirs at some point. Well, maybe if they're young enough and healthy enough, they might be able to get more bang for the buck with their heirs by funding life insurance with that annuity, possibly taking the free withdrawal or annuitizing on, maybe you see some 5x5 annuitizations or whatever the case may be. You could fund a guaranteed UL, some product of that type, and double or triple the death benefit while not incurring any additional cost, and again picking up a little commission for yourself and maximizing your client situation. Also, if you have a client who maybe doesn't want to go the life route, if they have an annuity with enough size to it, maybe $200,000 or $300,000, you could take the 10% free withdrawal and use the liquidity of that to purchase a new contract, pick up a new bonus for your client, and do some good that way. There's a number of options when you find out what your client has and what they're intending to do. One other thing that we really like here at SilverSide is asset-based care. You might look at a client situation and you might say to them, what are you doing for care funds or illness funds in your older years? And they might say, well, we have this CD, this $100,000, $200,000 CD, or this annuity. This is what we're going to use should any care emergencies pop up. Well, given that, there's your opportunity to go in and say, well, if that is your self-insured care money, let's maximize it. Maybe we can look at linked benefit life insurance. life insurance where you could pay either a single lump sum or possibly a multiple sum, but say in the example of a single pay life insurance with a good linked illness rider, you could say take $100,000, and depending on your client's age, you might get $200,000 or more in death benefit and consequently tax-free illness benefit. That's one option. Another option is on the market today due to the Pension Protection Act of 2006 that kicked in 2010. There are PPA, Pension Protection Act compliant annuities. And those allow for tax-free withdrawals from designated annuities for long-term care. In this way, you might be able to take a $100,000 annuity and with favorable tax implications, turn it into $300,000, $400,000, $500,000 worth of care. There's also, if you have clients who maybe their health isn't quite as good and they're not going to have an easy time getting through either life insurance underwriting or PPA compliant annuities, most of those have some sort of underwriting as well. There are certain income rider annuities that have additional care benefits. So depending on what your client's situation is, there may be various options. So if you go to your client doing a review, you might say, well, I'm not an expert in asset-based care. Well, we here at SilverSide like to think we are. We have developed our asset-based care fact finder. It's a one-page sheet. It takes down the basics of what a client's situation is, what resources they have available, what their age and health and marital situation is, and what ultimately they'd like to see happen with the money. And that's a tool you can use when reviewing a client's situation. So give us a call here at SilverSide and we'll shoot that over to you. It's one page. You can fax it back, and we can use it to help you design a case to maximize your client's situation. So I was trying to keep today's update under 10 minutes. Hopefully I have done that here. So I'm going to wrap it up. Thank you for spending the time to listen to me here, and I'm going to invite you to go ahead and call us at 480-998-1286. We can help you with product, and we can help you with design. That's what we're here for, so please give us a buzz, and we'll get started. Thanks for being with me today.